The insurance rates are getting hiked even further here in Florida, and homeowners, they're being kicked out of their homes and forced to sell. This is a crisis that's getting even worse in 2024, and it's one that's going to have massive ramifications on Florida's housing market and economy, something that you all need to be paying close attention to. Because many people thought that Florida was this impenetrable state over the last couple years. All these people moving here, people thought the economy here was like ironclad. Housing market here was going to keep going up, is what everyone said. But now we're seeing the exact opposite occur. Florida is now mired in a housing crash. Inventory of homes for sale is spiking. Homeowners can't afford it. They can't afford to live down here anymore. The insurance rates, on average, across Florida, everyone, a homeowner pays $11,000 a year for their homeowner's insurance cost. That amount has doubled over the last 3 years. I want you to think about what that means for people who live here in Florida, particularly Miami. I'm in Miami right now, and I'm going to show you some of the things that are going on here in Miami. There's some really concerning things happening here on the ground that I'm going to show you involved with this property crisis. But I just want you to think about what an $11,000 a year homeowner's insurance policy means. It means that if you're like a retiree who owns in Florida, like many of the homeowners here are, it means that you really can't afford to live here anymore because your insurance, your property taxes, your HOAs, they're going up, and they're going up like a hockey stick. They're just going up like that, while people's incomes are staying stagnant, or maybe people's incomes are going up 4 or 5% a year, not even close to enough to cover these costs. And I fear that this is going to be a turning point for Florida's economy, and I fear that we're just seeing the tip of the iceberg with what's about to happen here on the ground in Florida. Because as you all remember, folks, and maybe you don't remember, but in case you don't, I'm going to tell you, back in 2007, 2008, Florida's economy and housing market got absolutely crushed by a massive housing downturn. Home prices here in Miami went down 50%. And I want you to think about what that means. The price of a house went from around $350,000 to $150,000, $160,000. People got wiped out. The foreclosures were immense. 10% of all mortgages here were in foreclosure. And so that's the history we're dealing with in Florida, everyone. Massive downside, massive volatility. This state's unemployment rate went up to 10% in that last recession. And so, for the people out there who think that Florida is somehow different this time, that it can't happen again this time, I would suggest exercising some caution, because we're seeing some of the same early warning indicators. And one of the early warning indicators here that I actually want to show you is these new apartment buildings here that are being built. These new apartment buildings, many of which are empty, here in a neighborhood called Wynwood here in Miami. The rents here at an apartment building like this are around $3,000 a month for a 1-bedroom, $4,000 a month for a 2-bedroom. These rents are priced like we're in New York or LA. That's where Miami has gotten to in terms of the lack of affordability. It's priced like New York and LA when it is not yet New York and LA in terms of the strength of its underlying economy, as well as the incomes of the people that live here. And that's really the big point and the big problem in Miami's economy and housing market right now, is the incomes have not gone up nearly enough to justify the crazy increase in prices, the crazy increases in rent, and the crazy costs in insurance. So in Miami-Dade County, the median household income, the typical household, can you guess what they earn in Miami-Dade County? Boy, I gotta tell you, there are some loud cars in this neighborhood. People really like loud cars down here. The median household income is $70,000, everyone. While the typical rent is close to $3,000 a month, meaning that the typical household has to spend about 50% of their gross income on rent, which is just crazy. That's actually the highest rent to income ratio in America. So Miami is actually the least affordable city to rent in America, even worse than New York, even worse than anywhere in California. And so you ask, how sustainable is that situation, especially with all these new apartment buildings going up? And the answer is it's not sustainable. The vacancy rates here in Miami are now going up. More and more apartment buildings are sitting empty. More and more landlords are now having to reduce the rent in order to fill the vacancies. And that's one of the leading indicators of a market correction, of a market downturn. when you see these big luxury buildings all of a sudden have a lot of vacancies and they're offering concessions. And in a second here, folks, I'm going to show you guys some houses here in an adjoining neighborhood so I could show you what's going on in the local housing market. But first, I want to actually show you an office building just up the street. Actually, just over there's an office building I want to show you, because this office building is now facing foreclosure. And it was just built a couple years ago. And it's a sign of the expanding commercial property crash here in Miami and other cities around America. All right, folks, here we go. This is the office building right behind me, Gateway at Wynwood, that I was telling you about, that's getting foreclosed on. You can see it's a brand new building, an amazing street corner here in a busy intersection in a growing neighborhood. It's in default. It could get foreclosed on. The loan on it is for $100 million. It was built just 2 or 3 years ago, and it was catered to tech startups and crypto startups. Those were the tenants that they wanted to attract to this office building, and very clearly they're having issues doing it because they've now defaulted on their loan. And the lender, this group called A10 Capital, they're looking to potentially foreclose. And you say to yourself, like, well, hold on, wait a minute. This is supposedly like a great location in a booming city. They just built this brand new office building, and just 3 years later, it's getting foreclosed on? What's going on here, everyone? I mean, it's a sign that the economy is not as healthy as you would think. It's a sign that these developers, whether they're office developers or apartment developers, just went too crazy during the pandemic. They built too many new buildings, too many new structures, and now they're sitting vacant and they're sitting empty. And actually, the Wall Street Journal just ran an article maybe 6 to 7 months ago about how the office market here in Miami is slowing big time. And I'm talking to the locals here, everyone. I go to a restaurant, I go to a coffee shop, I talk to people on the ground. And the big thing that I'm understanding when I talk to the locals is a lot of people down here in Miami and in Florida are struggling. They're struggling to get by. I've talked to people who've lost their job over the last year, and they're just trying to find side hustles so they can stay afloat and pay their rent. I've talked to people, who kind of bought the dream of moving down here during the pandemic from New York or Los Angeles and are kind of struggling to find their way. And I'm getting the sense that a lot of people are actually starting to move back to the cities they came from during the pandemic. This is called boomerang migration or reverse migration. This is a major trend that we are now seeing, which is causing more vacant apartments, which is causing a big surge in inventory on the housing market here in Florida. And this is the key point where we're going to link it back to the property insurance crisis. Because all of a sudden now, the homes for sale on the Florida housing market are spiking. Inventory across the state's around 140,000 homes. That is the highest level it's been in 4 or 5 years. And so there is no longer a shortage of homes in Florida. Very important that you guys understand that. Actually, quite the contrary, we are now seeing a deluge of supply, what I call a wall of inventory, hit the Florida housing market and hit the Florida housing market really, really hard. And actually, you can see in this neighborhood here, there's some beautiful art. So the neighborhood I'm in right now, Wynwood, it's known for its murals. And there's always these kind of cool murals. You walk every 1 to 2 blocks. It's really, really nice. It's really, really beautiful. You can also see it down that way as well. However, nice murals doesn't mean people can afford $3,000, $4,000 a month in rent or $1.5 million for a house, which is what some of these houses started selling for over the last 2 or 3 years. I mean, in 2021 and 2022, everyone, you had all the investors pile in. You had all the part-timers from New York pile in who came down here during the pandemic. And they bid up the prices to the point where in some of these neighborhoods, you can't even find a house for less than $1 million. And many owners, they can't even afford to live in these homes anymore. Because according to Insurify, the annual property tax bill in Florida is $11,000 a year for a house / condo. Now, I mentioned that in the beginning, but I want to give you some more perspective on that number. The average property insurance cost for a homeowner in America is around $4,500 a year. So in Florida, the cost is 2 to 3 times higher than the US average. In fact, the third most expensive property insurance state, Oklahoma, has costs that are half the rate of Florida. So really no other state is even close or on par to Florida in terms of how expensive the property insurance is. And so I want you folks to put yourselves in the shoes of a Florida homeowner. Maybe they're a senior, they moved down here a while ago. Maybe it's actually a second house. It could be a vacation home. And they were used to paying $4,000 or $5,000 a year for property insurance maybe 4 or 5 years ago. Now they're paying $11,000 a year. Their property insurance doubled. At the same time, their property taxes doubled. Their property taxes are now maybe up to $8,000 or $9,000 a year. And in some cases, if you're in a condo, you're getting smashed right now by HOA assessments that are in some cases doubling and tripling. So kind of from all angles, Florida homeowners and homeowners here in Miami are just getting crushed. And the unfortunate thing about it is that this is kind of ruining some people's lives, right? I mean, some people have lived in houses here for a while. They were comfortable. Now they can no longer afford it, and they're being forced to sell. And that's sad, and it's unfortunate. And actually, the state insurance carrier called Citizens, so there's a kind of state-backed property insurance carrier, they're still going to increase the rates this year. So they're proposing a 13% insurance rate hike from the state insurance carrier. It's kind of like the insurance carrier of last resort. If people can't get insurance in the private market, you know, if they live in an area in a flood zone, or if they live in an area kind of that gets hit by hurricanes a lot and the private insurance don't want to insure it, they'll get Citizens, the state-backed insurance. But even then, Citizens is increasing the rate by 13, 14% still. So there's really not a whole lot of options for Florida homeowners. Now, interestingly, inventory is going up everywhere in Florida. People are being forced to sell, but Miami-Dade County is kind of the area where there's still somewhat of a shortage. According to data available on Reventure app, there's still a 10% shortage of homes for sale compared to the long-term average in Miami-Dade. And in some neighborhoods, there's as much as a 30 to 40% shortage, like in Coral Gables or Kendall. So there are still areas where there's a big shortage, but more and more we're seeing that disintegrate. In this zip code here in Wynwood and Buena Vista, inventory is now up 50% from normal. So there's over 100 homes for sale in this neighborhood. During the pandemic, there was like 20 homes for sale. So look at that, everyone. You see that inventory spike. You see the evidence of what I'm describing to you here with people being forced to sell. We also see some investors selling. And interestingly, we got a home for sale right here, everyone. All right, folks, so I just looked up this listing on Zillow. It's a 4-bed, 2-bath, 1,700 square feet here on a little corner lot. You can see it's actually, you know, a decent sized lot, so it's got that going for it. But you're not going to believe the price tag here on this house, everyone. You ready? You ready for it? Can you guess? Miami, Wynwood, 4-bed, 2-bath. How much this house is listed for? $1.65 million. $1.65 million. And they've done a $100,000 price cut. Good for them. They've done a $100,000 price cut. But the owner of this property bought it back in 2019 for $370,000. So they're literally trying to make a 5x return on their investment over 5 years. And if you look actually at the Zillow description, one of the highlights, basically, the thing it talks about is it can be redeveloped. It's a certain type of zoning where you can knock the house down and build some type of 4-story structure. And that's, I guess, what the owner thinks is going to get them $1.7 million. So it's actually an example of, like, you know, a speculative owner trying to actually, you know, market a conversion of this from a house to a commercial property, which isn't good, right? That's taking a house off the market. But I think while this owner is going to struggle is because of what I showed you a second ago. A lot of the commercial properties here are struggling. The apartment vacancy rates are going up. The office market here is in a downturn. And so what's going to be the demand to pay $1.8 million, $1.7 million and build a 4-story structure? I'm not so sure. Interestingly, if we go across the street, you can see we have a house here that's boarded up. So we have a house that's boarded up across from the house that's selling for $1.7 million. You can see over here we got a vacant lot. And then interestingly, you could see we have another property for sale right over here from Bianca Guevara. All right. You can see there's a beat up truck in the front yard. Not sure if anyone lives here. And you can see actually that this is listed for $1.3 million. And they actually just took it off the market because they couldn't get $1.3 million. And the current owner, they bought it for $23,000 in 1996. So they're trying to go from $23,000 to $1.3 million. They couldn't get $1.3 million. They got mad. They took it off the market. I mean, it just goes to show the level of greed inherent in this market still. And it goes to show how stubborn some sellers are in the market, right? Like, you bought it for $23,000, you're selling it for $1.3 million. I mean, you could sell that for $1 million or $900K. I mean, it wouldn't really make a difference. You would still be making a ridiculous amount of money. But a lot of sellers, they don't want to admit that the bubble is popping. Clearly, they don't want to admit that. And so that's why housing downturns often can kind of take a long time, everyone, is that even though the inventory in the zip code spiked and the office buildings in Miami are going to foreclosure and there's more apartment vacancies and more people are starting to get laid off, a seller, they're going to often hold on to their price that they think their house is worth until they are forced to lower it. Now, one very interesting thing is that I was actually walking around this neighborhood yesterday and I ran into a local, someone that lives in this area. And he's lived here for his whole life. And he had some really interesting things to say about what's going on in Florida's housing market right now. And I'm going to show you a clip from that interaction because I think it's going to really help you understand how the locals down here feel and where the market is heading into the future. Because, this guy, he's lived here his whole life. He's seen this happen all before. The other thing, Miami is just so expensive. I mean, how is anyone going to afford to buy in Miami?
Ron DeSantis, man. He keeps taking it up.
You think it's DeSantis who's making it more expensive?
Yeah.
I mean, I guess there is a correlation between him being here and it getting more expensive.
Because the way I look at it, it shouldn't be that expensive. For what? People trying to find a place to live, man, and it's hard.
It is hard.
One bedroom up to $2,000. One bedroom, and they not that big.
Is this where you live here?
Yeah.
Is this a one bedroom or is this?
Yeah.
Yeah. Looks like a nice place.
Yeah, it's cool.
Yeah.
Nice and cozy, away from
all the craziness.
Yeah.
I'm staying in the middle of Wynwood right now.
Mm-hmm.
Lots of noise, lots of craziness over there.
Oh, it's always jumping over there.
Are you from here originally?
Yeah.
Yeah.
From Overlock.
From Brownsville area or from?
Overlock, Miami Gardens.
Okay, not too far, right? Do you think Miami's gotten better or worse over the last 5 to 10 years?
Well, of course we're gonna say it's worse because as time goes on, everything's jumping up.
Getting more expensive.
Yeah, it's speeding up.
Yeah.
It'll be all right.
Yeah.
But I'm gonna keep me a place to stay.
Well, you look like you got a nice spot here. It's pretty peaceful, pretty nice.
Yeah.
Yeah.
Friends everywhere, neighbors.
Do you think the prices and rents are ever going to go down here? Or do you think they're just going to keep going up?
They go down.
Yeah.
Yeah, go down.
Has to, right?
Yeah, you got to. Everybody be walking the street like a bum. Got nowhere to stay.
Yeah. What's your name?
Charles.
I'm Nick.
Nick.
Nice to meet you, Charles.
Nice to meet
So my friend Charles, he thinks housing market here is going to crash. I agree with him. Home prices are extremely overvalued when you look at data on Reventure app. 40%, 50% overvaluation rates. You guys are going to make sure to go to www.reventure.app and look up the overvaluation rate in your zip code and see how it's changed over time. Because that's going to help you understand the downside in your market. And just one quick thing I want to show you folks before signing off is what we got going on here in this neighborhood. We got chickens. We got chickens running around in the street next to houses for sale for 1.7 million. They're 1,600 square feet. I mean, just throw the data out the window for a second on overvaluation and just think about that. They're trying to sell you like this area is completely changed, like this area is like the place to be forever. But we have chickens wandering around. Nothing against chickens. Great if you have farm fresh eggs. But to me, that's an indicator that your market has not yet gentrified. If there's chickens on the street, you're still probably in the second or third inning of gentrification. You got a long way to go before the knockdown houses are worth 1.7 million. So with that, folks, if you appreciate this video, make sure to hit the like button. Go to www.reventure.app and make sure to sign up for a premium plan, $39 a month to access all the data for your local housing market, particularly overvaluation rate, inventory, and price cuts. Those are the big metrics to pay attention to right now, especially in Florida.